me great pleasure to be sharing with you some salient features for Redefine for the year ended 31 August 2014. This will be our first distribution as a REIT. We moved to an all capital share structure with effect from the 29th of August. So this distribution will be a dividend, but for REIT purposes it is REIT income. Redefine currently has a market capitalization of 36.6 billion rand. That is some 20% up on the same period last year, and most of that growth has come from almost exactly 20% more shares in issue, which will be ranking for distribution for this period. Just looking at our balance sheet, Redefine for the first time has exceeded the 50 billion rand mark when it comes to property assets at 51.5 billion rand, and that is some 8.9 billion rand up on last year. If we look just at our distributable income, our South African distributable income totals 2 billion rand, once again a first for Redefine. Looking at Redefine's financial results for the second half of 2014, the directors of Redefine have declared a final distribution of 38.14 cents, which is 9% up on the previous period. And if I combine the first half and the second half distributions, we are reflecting growth of 8.5%. That is slightly above market guidance, and that result has been driven by a robust performance by our core property portfolio, bolstered by acquisitions that were made during the course of 2013, and we've had a very good performance from our offshore operations, mainly driven by a very strong foreign currency against the rand. In particular, that's Redefine International. From a split point of view, on a geographic basis, the South African operations delivered approximately 80% of the distribution. 20% came from offshore sources, and just from an efficiency point of view, that 20% that was derived from offshore sources represents about 15% of our total property asset base. A pleasing result for us. If we look at our funding costs, they've been maintained at about 8% as an average cost, and bear in mind that cost has absorbed 2 rate hikes during the course of 2014, which total 75 basis points. Redefine's had a very busy time when it comes to funding its property asset growth. About 4.5 billion rand in equity was raised during the course of 2014, and about 2 billion in debt funding was similarly raised. Redefine's debt is currently 78% hedged against interest rate movements, and if we look just at the equity side, a further 2 billion rand was raised since year end, giving us the 20% growth in market cap that I referred to a short while ago. In terms of our loan to value ratio, Redefine sitting at 37% of its total property assets. It's a little bit higher than we would like it to be. We would like to be in the range of about 35%, but it's by no means stretching the envelope at 37%. We are very comfortable with that level, and we anticipate maintaining it in the year to come. Redefine's prospects for 2015 come with a slight caution, and the caution is that South Africa as an economy is in an upward interest rate cycle. We are in an interest rate sensitive environment, which is a caution to bear in mind. And also with that, we are operating in an environment where there is sluggish economic growth, which puts pressure on our existing tenants, as well as creating demand for new space from possible new entrants to the market. And further to that, we are anticipating administered prices increasing into the new year. Electricity in particular is anticipated to increase by 12%, courtesy of NERSA, and rates and taxes are on an ever-increasing spiral. Having said that, our property portfolio is largely defensive. Approximately 80% of our property asset base is in that category, and with that we believe that we will be able to deliver distribution growth between 7 to 7.5% for the coming year, despite these negatives. We also anticipate a number of opportunities coming our way, and Redefine is confident that in its ability to execute quickly through its agile approach to transactions, we will be concluding a number of exciting ones which will further bolster our defensive portfolio, and with that comes some look at international markets where we do see some promise in the new financial year. Thank you.